Good morning and welcome to this Thursday, October 10th, 2019 edition of Trading Places Live on StockCharts TV. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'll be your host of Trading Places for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. All right, well, Zach, getting too close to the end here of, I guess, our second week on StockCharts TV. How are you doing over there in Seattle?
I'm hanging in there. It's nice and cold here out in Seattle. I keep on having to scrape ice off of my car.
What? Ice?
No, it's October.
Wow.
Well, that's not unusual for us in October, but for the first week of October, that's kind of unusual.
Yeah, I don't think we're going to have ice around here in South Carolina anytime soon, I'm guessing. But it has cooled off, so we have gotten away from all those 95-degree humid days. It's been in the 70s this week, so it's been pretty enjoyable, actually.
Oh, my gosh.
Yeah. It's actually been pretty good golf weather, so you know where I've been.
Yeah.
Golfing.
All right, well, let's get on with the show here. I'll give you your agenda.
Yeah, that was your cue to say golfing, but that's all right. Let's go ahead and get into things today. All right, so we're going to start off with a daily market recap. Going to talk a little bit about an earnings spotlight. The one stock in the news today with earnings, but earnings season getting ready to pick back up again. So this is going to get exciting here over the next few weeks. This is the time of the year that I really enjoy. I love digging into these earnings reports, looking at who's performing well heading into their earnings. That usually gives us some clues. So we'll have a lot to talk about over the next several weeks. Then we'll get into some upgrades and downgrades. International ETFs, just got a couple comments there I want to share with you, especially if you like to trade international ETFs. Do an industry watch, take a look at a few industries that look interesting on their charts, and then end with our famous 3 you must see. So those are going to be 3 stocks. Just looking at the charts, I think those are 3 you want to pay attention to as we go forward. All right, let's jump into the market recap for yesterday. First, I'm going to bring up the candle glance that I like to show, featuring the Dow Jones, S&P, NASDAQ, Russell 2000, New York Stock Exchange, and then a few foreign markets as well. You can see we did rally yesterday. That's the good news. Bad news really didn't matter technically on the chart. We're still in a short-term downtrend across all of these indices. It was nice not to see a breakdown below the lows that we had last week. And after the way we had finished the day before yesterday, that certainly was something maybe that a lot of traders were looking at to see whether or not we would hold those lows. But we did have things turn around. China said that they might be interested in a partial trade agreement. And so that had, the market kind of more bullish, I guess, throughout the day. But really, when you look at it from a bigger picture, you stand back. The last week or two really hasn't been a whole lot. We had the down move, the back, move back up. Just can't seem to get through these moving averages on the major indices. And you can't be in an uptrend until you can get above and stay above rising 20 and 50-day moving averages. And that is not what we have right now. So we remain in consolidation. Looking at the numbers, you can see the Dow was up 182 points, the S&P 26. The NASDAQ 80 points, so it was a relative winner yesterday. And then relative laggard was the small cap Russell 2000. Of course, we're all used to that. The Russell was up 8 points yesterday. Looking across the globe, the DAX actually, came up yesterday, was challenging its 20-day moving average. Could not get through it, though. And so far, haven't been able to get that close above the 20. So very similar to what we're seeing here in the U.S. The Shanghai, though, after moving lower for the last few weeks, actually hit its 50-day moving average and had a nice recovery off of it. Looked like it was breaking down, came back up. That's a little bit of a good sign there in the near term. Nikkei above its 50-day, but also in a downtrend. You can see that's been one common theme really across the globe, is almost everything's been in a short-term downtrend. As we get into earnings season, we'll see if that changes. The Hang Seng Index, probably one of the weakest, continues to drift lower back toward that August low. And then finally, the TSX actually has been pretty strong. And I'm going to pull this chart up just for a second. I wanted to stretch this out and just show you the weekly chart, long-term weekly chart. This was a breakout here in September. We haven't really talked too much about it, but that was a breakout to a multi-year high. We pull up the monthly 15-year, and you'll see that was actually a long-term all-time high on the TSX. So that was a really good, when we were talking about the relative strength around the world, you'd have to throw the TSX in there as one of the strongest right now. Something to consider. Sectors, let's take a look. Technology led yesterday up 1.49%. Market went up. We like to see technology lead, but again, really nothing major taking place here on the charts. It was nice to see when you look into technology that semiconductors and software were leading the move, but really not a whole lot to glean from yesterday. I just think other than having 11 sectors higher, which is nice, not really any breakouts or anything to speak of. When we look at those sectors on the candle glance, here was technology leading. Yes, we were able to get back up above the 50, challenging the 20. The overall downtrend remains in play. This wasn't any kind of a big breakout. Nothing that I would say, hey, we're going to definitely move higher and build off of yesterday's gain. I don't see that. I see us across every one of these aggressive sectors remaining in this 2, 3, even 4-week downtrend. So that needs to change. The good news is the longer term is more bullish, in my opinion. I see, for instance, on the S&P 500, when I look at a daily chart, and I'm going to stretch this out a little bit more. I think it looks better or it looks a little easier to see, I think, on a 1-year chart. But what I'm seeing here is an uptrend off of that December low and really equal highs and so far higher lows. So if we could strengthen from here, I would view this as an ascending triangle, and the breakout above that 3,025 level would be very, very bullish. Now, whether or not that happens, who knows? If we fail, the bearish side, if we fail and come back down and can't hold 2850, that would lead to the double bottom at 27.25. So I think the market's still up in the air in the near term. I firmly believe the market goes higher later in the quarter, maybe into 2020, but we've got to get through the congestion that we're suffering through right now. All right, the 10-year Treasury yield, taking a look here. This has been on a move to the downside for quite some time. And really just what I wanted to point out here is that when the yield is falling and you're in a bear market, take a look what happens. When the yield falls, the equity market falls. Get a little bit of a bounce when you get a bounce in the yield, but then you just continue. See how the equity market, the S&P goes with the 10-year Treasury yield? Same thing in 2007, 2008. Look what happens when you get into a bull market. Yes, you struggle. The S&P struggles when we get the big drop in the 10-year Treasury yield. But notice we're not trending lower anymore. We're actually trending higher, even though the yield's going down. Same thing 2014 to 2016. 2014, yield was going down. The S&P was going up. Then we ran into a little bit of congestion. Look at 2018, 2019. Yields going down. We actually got a pretty nice rally in the S&P 500, but we're choppy right now. If we bounce and the 10-year Treasury yield begins to move higher, I think that would bode. And you look back during bull markets, when that yield's rising, that's when you get your strongest moves in the S&P 500. So this is something to watch for, because when you look back over the last 6, 7 years, we've had multiple lows down just below 150, 140, 135. We're down pretty close to that level, and this is an area where the 10-year Treasury yield certainly could bounce. And if it does, I think that would be the catalyst for a breakout on the S&P 500. All right, a few more stories, just a couple quick stories. Yesterday, J&J, they did come out and they were ordered to pay $8 billion in a case involving its Risperdal drug. See the stock taking a pretty big hit, down 2%, still holding on to its support level around 126, 127. That's what I would be watching. AAL, this American Airlines, they pre-announced inline third quarter results, and the stock did move higher, but the overall downtrend, I'm not really excited about AAL. This morning, Adtran came out, and they said that they see Q3 and Q4 revenues below estimates, Q3 earnings per share lower as well. When we pull this up, and this is why, I think that the relative charts are so important. This is in the telecommunication space. Look at Adtran relative. This back in the huge volume sell-off in July, you can see we moved to a 52-week low. This stock has seen almost no relative strength, even after getting hit so hard. And so I'm not surprised that we're coming out with a not so good warning here. Hexo, HEXO, that's Hexo Corp. Another company, they see Q4 revenues below estimates. We don't see any data here in terms of relative to its industry, but look relative to the S&P 500. Hexo's been on this downtrend for the last 5-6 months. So am I surprised that there's a warning coming out now? No, I'm not. Let's see. Bed Bath & Beyond had an announcement. They selected former Target executive Mark Tritton as their new president CEO. The stock had been showing some strength here over the past 5, 6, 7 weeks, and now we're getting the news that they've got this new president. Pre-market action, by the way, BBBY is up over 20%. That was when I looked maybe 45 minutes ago. So it looks like it's going to be a very strong day, a nice breakout here above this double top. I would say that at least for now, Bed Bath & Beyond is in a confirmed uptrend. KRA, this is Creighton Corp. They warned of an earnings shortfall. This one was a little bit more surprising, only because we had been seeing a little bit more relative strength in this company. The downside, though, is when you look at the volume trends, there seemed to be more selling on the way down than there was buying on the way up. So a little bit of a mixed picture. They cleared it up for everybody. They gave an earnings shortfall today. They warned of it. And then the last one here, this was actually a smaller company, FOLD, Amicus Therapeutics. Kind of a surprise. This one has been downtrending, been a horrible performer. They see the Q3 revenues higher. Be very interesting to see how the market reacts, because look back at this heavy volume reversal that we saw about a week ago. Stock came back down one more time, and now we're getting a hike in their Q3 revenue estimate. Well, this one will be one that I think will be interesting to watch. Is this going to be a change of character on the chart? I don't know. All right, let's move into earnings spotlight. I just have one stock that I wanted to talk about, and that is Delta Airlines. Delta did come in a little below expectations on their revenue, light there. They did beat on their bottom line, though, 232 versus 226. In pre-market action, though, down 4% last time I looked. So not getting a great response. Looks like it could come down maybe and challenge this low. This is the low I would be watching on the chart for Delta. Break below $51, I think would be bearish for Delta. One other stock I'll look at very quickly in terms of earnings, Citigroup. They report tomorrow before the bell. This is what I consider now the official kickoff of earnings season. We are starting to see a little relative strength building here in Citigroup. And overall, it's been in an uptrend. It's not my favorite bank out there, but it has been one of the better performers, or at least one that's better than average. So let's see how they come out with their earnings and then go from there in terms of earnings season. All right, upgrades and downgrades. I'm going to start with Apple, which has been a really good performer. They were upgraded this morning. You can see in a beautiful uptrend. I think there's a lot of folks accumulating Apple. It's outperforming its computer hardware peers. And when you look down here, computer hardware is crushing the S&P 500. So when you're one of the best stocks within one of the best industry groups, I would be expecting some pretty good numbers. So Apple upgraded, looks good. Bed Bath & Beyond, I already showed the chart, so I won't go there, but they were upgraded. Match Group upgraded. This one is going to be very interesting because it did come down and hold this 70 level and has started to move higher. An upgrade and a move and close above 80, I think, would be bullish here for Match Group. Pure Storage, PSTG, another one upgraded. This is a stock that had broken out above these recent highs, pulled back, got down to the 50-day moving average. We'll see whether or not it can resume this prior uptrend based on this upgrade today. Downtrends, I mentioned Adtran had the warning. They were downgraded. I'm going to focus here on Cisco. Cisco downgraded. I want to see if it opens down below 45.5, 46. And I did not look to see where it was in pre-market. But if Cisco opens below 45, it is going to need a hollow candle. If it doesn't, what you've got here is a move down, a bear flag, and a breakdown, which would not be a good thing for Cisco. Now, Cisco doesn't report in October. They report a month later, so it'll be in November. But the way the stock's trading right now, not looking good. And that's disappointing because I thought Cisco a few months ago seemed like it was ready to carry the market, and that has not been the case at all. HPQ, so this is HP Inc. They were downgraded. Look at the chart. Are you surprised? I'm not surprised at all. It's been a horrible stock relative to computer hardware. Just got done talking about how good the computer hardware group has been. Well, if you're in HP, you're not feeling much of that strength. Last one, another one in that computer hardware space, NetApp, network appliance, another stock that has just not been a very good performer, gets a downgrade, and it too is in that computer hardware space, just can't seem to catch a bid. All right, international ETFs. What I want to do here first, for those of you who, I don't know, if you've traded international ETFs before, some of the iShares, you've got to be careful. And I say that not just because of the obvious risk of owning equities, but you've got to be careful because of the dollar component, the dollar effect. And we've talked about this before, but I like to bring it up once in a while just to make sure everyone's aware. Take a look at the German DAX. Now, let's say we're looking at this chart, and for whatever reason, let's say back at the beginning of 2018, it's setting a new high, and you're like, man, I want to jump on board of this freight train that's moving higher. I'm going to get some of the German stocks. I'm going to buy the EWG. Now, the EWG, I'll come back to this chart, but the EWG is the iShares for Germany. So you would think, okay, if I'm buying the EWG, I'm buying the German market. Well, since that high at the beginning of 2018, the DAX has pulled back 11%. When you look at where the EWG is right now, it is actually pulled back 22.6%. So if you own it and you're looking at it, you're wondering, why am I down 22% when the DAX is down 11%? Well, you lose return on these iShares when the dollar is strong. Look at this period when the dollar has been going up. So as the dollar goes up, the performance of EWG relative to the DAX goes down. So you would think the EWG and the DAX would just be a straight line going across. For the most part, it's just tracking the German DAX, but that is not the case. You have to understand that there is a dollar component in here. So, and it doesn't matter which of these iShares you're trading, you do have a dollar effect that you have to be aware of. When you go back to, say, 2003, let's say you caught the DAX at the bottom and you're riding this up. I didn't put a percentage on it, but let's just say, you go up from 2,000 to 8,000. So almost a four bagger. Well, this went probably from about 6 to 27.5, which is even more. Maybe it's less than 6. Maybe it's 5.5. Maybe it's a 5 bagger. Look at EWG relative to the DAX. See how it outperformed? That would have been a great time to be in. Well, what happened? Why? The dollar was weakening. So see how when the dollar is weak, it improves your return on those international ETFs. But when the dollar is strong, look at this weakness that we've seen over the last 8-10 years. That's coincided with the dollar hitting a bottom back in 2008, moving higher. That is coincided with the EWG underperforming the German DAX. So I just want to make sure everybody's aware of that if you're trading these international ETFs, be careful and realize that when the dollar's in an uptrend, it's going to cut into your return. All right, looking specifically at some of these ETFs, international ETFs, and you can go into the market summary here on StockCharts and then just scroll down, and it will give you the various ETFs. Now, I went through and I just looked at all the charts, and I wanted to pull up some of these that I thought looked pretty good, better than average among the various areas of the world. So first, I'm going to start with EWK. I'm going to stretch this out a little bit. Let's look at a 3-year weekly chart. So Belgium came off that low in December and has what looks to me to be a nice ascending triangle. Not exactly equal highs, but pretty close. Rising lows, holding the 20-week moving average. I think EWK looks pretty good. EWC, that's Belgium. Here comes Canada. Talked about Canada earlier. Look at EWC. Now, the TSX broke out. Remember, we talked about that earlier? The EWC didn't. Why? The dollar. Strengthen the dollar. But this one still looks pretty good. Higher highs, higher lows. If we ever get weakness in the dollar, it will add to the strength in some of these iShares that I'm pulling up. EWJ, this is Japan ETF. Look at the breakout here. Multiple tops around 55, 55.5. We finally made that breakout. EWJ looks to be strengthening. EWN, this is Netherlands. Another one moving higher, putting in these higher highs, higher lows, trying to get a breakout. RSX, this is Russia. Now you got the double top, so you want to make sure we hold this 21.5. But overall, nice uptrend here in Russia. EWL, this is Switzerland. Big move up. This has been one of the strongest areas. One word of caution is just a negative divergence, higher price, lower PPO. But other than that, this is a nice one. And then the last one I wanted to go over is the Taiwan ETF. This one's getting close to a breakout, also taking out these recent highs. I think the EWT looks pretty good. All right, let's move on. I want to go into Industry Watch. And the first thing I want to do is look at the S&P 500 before we get into the industries. Because what I did is I went back and looked at the last month to see what's been going on in the last month. Well, if you look back to the S&P where we were on September 10th, today's October 10th, we were about 2% higher than where we are right now. So just kind of keep that in mind. We were 2% down on the S&P in the last 30 days. When I look at my relative strength of industries, and this isn't just a group, it is the group divided by the S&P 500. So we're looking at relative strength. And I went back and I pulled this up looking at the last month. And home building, home construction, the top performing group. Look at that outperformance, absolutely crushing the S&P 500. But the second one might really surprise you. Computer hardware. I can explain the first one, home construction. Treasury yields have been dropping. I mean, not only do we have a pretty good, decent economy, but we got interest rates falling. I mean, it's a perfect environment for home construction. But every time in the past we have looked at the computer hardware, when we've had trade issues, and I'm going to stretch this out a year. When we talked about the trade issues, remember fourth quarter, it was huge. That was one of the things driving the market down. Computer hardware took a hit. Back in May, we talked about the computer or the trade war and, just increasing risks there. Tensions were building. Computer hardware got hit. Of course, you got Apple. You got a lot of ties to China. Apple took a hit. Computer hardware took a hit. In August, we really didn't take that big a hit in computer hardware. And in fact, we outperformed the S&P. I'm going to pull up one other chart here and let you look at this computer hardware versus the S&P 500. And then I'll put it on a solid line. So back in the fourth quarter, when the trade war was, kind of at its peak or one of its peaks, computer hardware was getting crushed relative to the S&P. In May, when the trade war came up, computer hardware got crushed. August, I was talking about this. Computer hardware did not get hit. When we had all of those fears again building on the trade war, the market took a hit to the downside. The computer hardware group, after one initial move lower, throughout all of August, it was actually rising. And look at it continue. This is one of the strongest areas of the market and worth following as we move forward. And it's one of the reasons, again, why I think Apple is a really good choice as we head into earnings season. I'm going to be absolutely shocked if they don't have a good report. Now, because Apple's already going up, when we look at that chart, you can see the stock's already going up. A lot's being built in. So having a strong report and continuing to rise can be two different things. The good report could be built in with all of the move that we've seen to the upside. So I'm not saying that Apple's going to be up $20 with its earnings. It could, but I think if it does, I think it's going to come out with strong results. And if it pulls back, I think it's going to be a great opportunity. All right, a couple of individual groups that I also wanted to look at, industry groups. Let's start with I'm going to want to stretch this out too. I'm going to go back a couple years here. Let's start with the durable household products. Look at all of these tops right here at 240. We have been in a downtrend, consolidating. Now we need to get that breakout, but watch 240, durable household products. That would be a big breakout to about a one-year high. Next up, footwear. Got to bring up footwear because of the breakout. The S&P hasn't broken out. We just said it was 2% lower than where it was 30 days ago. Footwear is broken out. Clearly, you've got an outperforming group with footwear, one to watch as we head in throughout the fourth quarter. Home improvement breaks out without the S&P 500 breaking out. Another group you want to keep an eye on. Specialty finance has been in a little bit of a funk. Yesterday had a pretty nice day, and this was the area that after it had a straight up move in April, pulled back and consolidated in May, broke out. We haven't moved below that 280 level. I would watch this. I think we're going to squeeze between this 279, 280 and that declining 20-day moving average. I think we want to watch that one closely. Last one is the medical equipment. And medical equipment, after breaking out here, I really want to watch 1800 to about 1825. These lows have been holding, and then the breakout level was 1800. I think medical equipment's fine as long as it holds that level, but healthcare has not been a good part of the market. This has been one of the better area, or it has been the best area within healthcare. We don't want this group breaking down. All right, now we are going to wrap it up with 3 you must see. First one that I am going to go over is CDW. CDW, I don't like this reversing candle, so let's annotate this real quick. But if we go in here and look at this, we have got lower PPO, we've got rising prices, and we've got a bearish engulfing candle. Now, I'm not saying that this is a bad stock, because if you pull up a relative chart, this has been a tremendous performer relative to its peers. But I think short term, it might have some issues. I think a pullback to 116, 118 in this range is probably what we want to look for. So, when I'm trading, that's one of the things I want to pay attention to. I want to know these warning signs of when to get out. A lot of people know when to buy. It's always easy to buy. It's hard to sell. And so just keep in mind, when you start seeing these reversing candles, negative divergences, that might be the time to think about taking some profits. Next up, GDXJ. This is the miners, the gold miners, junior gold miners. Bearish engulfing candle here. And the reason I mention it is that we've got a double top in play. There's your double top coming across. We lost this low below, so I'm looking at this more now of a downtrend. And unless the dollar reverses, it's going to make it really tough for this stock. So I think you got to watch this downtrend in here, but this is a group that I would be careful with unless it breaks that downtrend. And then we'll have one more, the final 3 you must see. And it is Netflix. And I'm going to go into a weekly chart, and I'm going to go back 10 years. And basically what I want to point out here is, you see this low? If you go back in its history, when it gets the double top, it comes down and holds that low. It moves up, comes down here, prints that low, struggles, does not go below that low and breaks out. Here, prints that low, goes up, comes back down. I think we really want to pay attention to that 230 to 250 area on Netflix. If it doesn't turn and it continues below that level, I'd be really careful. All right, that is it for today. I want to thank you again for joining me. Please remember to tune into Trading Places Live here on StockCharts TV every Tuesday and Thursday from 9 to 9:30 Eastern. I also conduct a similar Trading Places Live show on Mondays and Wednesdays from 9 to 9:30 Eastern at earningsbeats.com. Be sure to check out my blog, Trading Places with Tom Bowley, each morning, as I'll provide a webinar link there to access the Monday and Wednesday shows. Have a great day, everybody. I will see you back here on StockCharts TV on Tuesday morning. Happy trading.